Hello everyone, I'm Andy Chan from Econ28. In this video, I would like to take this opportunity to discuss an important concept that affects everyone in our lives, which is called the supply and demand. So, supply and demand. It has been around for many years. What is supply and demand? Which is what is available, and it is based on how much consumers want. To put it in simpler terms, demand is how much people want. Supply is how much is available. As if you look at the graph right here, higher demand will lead to an increased equilibrium price and quantity. As if you move the demand curve from here to the right, it will increase equilibrium price and quantity. On the other hand, for a higher supply, you will shift the supply curve to the right, which will decrease equilibrium price, but it will increase the equilibrium quantity. The next one, I would like to show you a couple examples of how to apply supply and demand to real life. As of today, there has been a shortage of nurses. So it would be a good time to have more nurses because there's a high demand for nurses. As you can see in the statistics here from Georgetown University, the higher demand for nurses will lead to a higher pay. Let's take another example. Christmas trees, for example. February is 2 months after December, and perhaps it is a good time to buy Christmas decorations, which means that not a lot of consumers would want to buy Christmas decorations for February, I don't think. But this relates to a lower demand means there will be a lower price, a lower equilibrium price, and a lower equilibrium quantity. And the last example that I want to explain is that when it comes to demand and supply, think about stock trading. As stock traders, people are the ones that look for true demand and supply every day, every minute, and every second. And it applies to probabilities, decision making, and the outcome of the stock. Now I like to introduce a couple examples from Thinkorswim. As I go to Thinkorswim, and these are one of the stocks that I traded yesterday, which is NIO. As you can see, let me delete a couple lines right here to make sure this is understandable. Just one more and voila, here it goes. So if I can zoom in, no, let's zoom out a little bit. Overall, the stock is in an uptrend. And some would say, what does that mean when this is in an uptrend? Why does price go up or why? Why does the price go down? The theory of supply and demand. I'll take an example. They start out the day with a lower price. And somehow they reach to the high of the day, which is $10.20, which is $9 from $9.72, which is a 48 cents difference. And how do I find out whether the price will go up or down? Good question. As I look at Finviz. I use Finviz and the other website, which is Stock Charts. I use the information such as the news. Some of the news like, be careful in both directions. The market piece is very ordinary now. And this could be one of the reasons that persuade investors and day traders to go into the market and buy more NIO stocks. Meaning that the more people buy the stock, means there's more demand for that stock. Meaning that more support. And when there's more support, more demand, as I stated earlier, the higher the price. On the opposite side, if people decide to sell the stock, meaning there will be more supply, that means a higher quantity, meaning that the price will go low. The more supply means more resistance, which would decrease the stock price. Applying the theory of supply and demand to real life, such as trading stocks, will give a clear understanding of how we can engage and disengage in the stock with higher confidence. And that's the theory of supply and demand. Thanks for watching and enjoy your day.